Hello. Today, let's discuss about the candlesticks in the market chart. First, what is a candlestick? The candlesticks are the reflections of what buyers and sellers are doing. Through the candlesticks, we can understand to what extent the price has moved from its open price. A candlestick will have the following three parts in it: the body, upper shadow, lower shadow. Fine. Let's discuss in details. The body of the candle represents the opening and closing price of the trading done during the period. The long lower shadow indicates that there is a buying pressure in the market. The same way the long upper shadow indicates the selling pressure in the market. The market is indecision if the length of the lower shadow and the upper shadow are almost equal. With a candle, we can observe the following 4 points of data. Open, the price at which the candle has opened, which means the first trade during the period specified by the candle. High, the highest traded price. Low, the lowest traded price. Close, the price at which the candle is closed, which means the last trade during the period specified by the candle. Then in the market there are two types of candlesticks will be formed. Let's understand them one by one. The first type of candlestick is a bullish candlestick. How to find it? Here the current candle's close will be above the previous candle's close, indicating the bullish market. The second type of candlestick is a bearish candlestick. How to find it? Here the current candle's close will be below the previous candle's close, indicating the bearish market. The candlestick shows us only the half information. Can you guess from which we can observe the other half of the information? Fine. Let's discuss in the next class.